Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. I am your host, Daryl Thomas, and today we're going to get into some juicy topics. We're going to talk about Patrick Bet-David's comments on Disney. I love Patrick Bet-David's content and just his values and everything. He's a Christian like I am, but he also just a very shrewd businessman, and he has the channel Valuetainment. And we're going to talk about the stock market sell-off. So we're going to get into a few different things. So let me go ahead and kick the intro, and then we're going to get into it. So let's go.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey, I am back. If you are watching with me, be sure to drop a comment in the comment section below. Hit the like button so that this content gets out to more people. Love to engage with you all. So, and love for this content to reach more people. So be sure to hit the like button and everything. So you catching me while I'm drinking my tea using my Martin Luther King cup. I got this in Atlanta last year. I was in Atlanta for a video shoot, and I was happy to be down there on Martin Luther King Day, so I was able to go visit the house he was raised in and things like that. And so, and I know Martin Luther King Day is coming up, and so, representing with my Martin Luther King cup here, drinking some tea, trying to get my voice back together, getting over some sicknesses and stuff. Hope that you all are doing good, though. So we're gonna jump into Disney. So Disney, I remember just seeing a lot about Disney. Disney was in the headlines for a lot of things. They went back and forth with the governor of Florida, Ron DeSantis, all these things, right? And there was, questions about, just their policies around LGBTQ type stuff. And Disney was doubling down on a lot of things. And so Patrick Bet-David has some really good comments in a podcast episode he did where he was interviewed on another person's channel. And so we're going to get into his comments, but we're going to look at Disney and just just their struggle since they had one previous CEO, Bob Iger, and then they got a CEO, Bob, I think it's Chapek or something. And there was this transition period, and the new CEO was going head to head with the governor, and Disney lost a lot of money. So we're going to go ahead and look at Disney's stock. So let's go ahead and jump over there. All right, here we go. All right, boom. All right, so this is Disney stock here. Obviously, you can see that it is down significantly. It has not ran with the other tech sector stocks. Disney was one of the hot stocks that was coming in when all of the money was being printed and into the system and everything, and all of the tech stocks just ran. Disney was one of those stocks, and so you can see that it sold off significantly, and it has not bounced back to those previous highs. It is currently sitting at about $90. It's low. It was low. Recent lows was about $80 something. It's been sitting at $90, looking like a good price target. I've thought about jumping in there, but the risk here is that this is CEO risk, where you have people that run the company, and you want to know who's running the company, what decisions they are making, because they can make just detrimental decisions to the company, and then the company ends up losing a lot of money. And so, like, if you're holding Disney, say like you bought in, during the pandemic, oh, Disney's a fair value company, I'm gonna get in at $155, right? Sorry for that, my cup that hit the mic. Disney runs up to $200, and it just begins to sell off. So now you're way lower than where you got in. You got in at 155. Now you're at $90. So, and a lot of this was due to not just the CEO. I mean, obviously, a lot of the tech stocks got just repriced when the Fed started hiking interest rates. But part of this had to do with the CEO. They've lost a lot of money. And so let's go ahead and jump over to this article here. This is Bob Iger. He came out in this article on November 29th, and he criticizes Disney's moves under Chapek. I was disappointed in what I was seeing. So as you can see from the main CEO, he was disappointed in what he was seeing. So it says Bob Iger, just over 1 year after returning as Disney's CEO following the company's board firing the previous chief, Bob Chapek, said publicly that he was dismayed at the Mouse House's performance under Chapek's tenure. Iger, who had selected Chapek, formerly head of Disney's Parks division, to succeed him in February 2020, made the comments Wednesday at the New York Times Deal Book Summit in New York. So a key thing to highlight here is that Iger selected Chapek. So he put his reputation and his word on in the fire, for Chapek. So he brought this person forward, and the board probably approved it or something based off Iger's long-standing employment as the CEO of Disney. And so you got to question Iger's discernment there or whatnot. Obviously, some people can just put on the show. I mean, we know this in our day-to-day lives. Like, people show up to a job interview, you see their best selves, but then you start seeing their worst selves later. But to put someone in the leadership of this position of this company that has a strong track record, that has been around for a long time and has influenced people and has been a joy for kids for not hundreds of years, decades, right? Like, that's something that's very important. This is a staple of a company. And so he says that he was disappointed, but he was the one that was advocated for Chapek to get on. So I was disappointed in what I was seeing in the transition period while I was out. I worked hard at distancing myself from it. So since returning to Disney, Iger said he has been fixing a lot of problems that the company has had and dealing with a lot of challenges. Some of those were brought on by decisions that were made by my predecessor. He said, while others are just basically the result of tremendous amount of disruption in the world and in our business. He also had a feud between Elon Musk and him, but we are not going to get into that. So we're going to look at what Patrick Bet-David had to say about this. This is very, very interesting. So Go Flow, what's up? Good to see you. Good to see you, family. What's happening? Neophyte? Disney was a buy back in Halloween. Yeah, I mean, it just depends on if you're willing to touch that with a 10-foot pole or not. Obviously, I mean, they have their old CEO back. You have Iger, who was there almost 20 years. I think he was there since the early 2000s, somewhere around there. So Iger has been there for a while. From 2005 to 2020. So he was there 15 years. And so maybe they will turn it around or something. But yeah, I wouldn't have a high conviction on this company. So, yep. So let's go ahead and jump over to the interview and what Patrick Bet-David had to say. All right, let's go.
In a year and a half of their stock, do you know how much they've lost?
I don't know the details, but I do know I've read a good amount about just like I don't know if it's the boycotting just of like the certain movies that they're putting down like that, but I've seen it go down.
So $195 billion. They've lost 56% of their stock. It's so bad right now that guess who's celebrating behind closed doors? Apple, because Apple's the only one that can buy them. And now
$195 billion. Did I hear that correctly? $195 billion. That is a lot of money to be losing. So yeah, Disney lost that amount of money, and now he's saying that Apple is the only one that could buy them out, because Apple's a multi-trillion-dollar company.
Now Bob Iger is kind of trying to split up the company so people can buy pieces at a time.
And this is facts.
These are facts. This is online. You can go
Yeah.
take a look at this. So they've been having a conversation with Apple. Apple's sitting right now on 150, give or take, $1 billion of cash.
Yeah.
They're sitting on real cash, is what they have. And that's public info. It may even be a low number I'm giving you. So let's look at Bob Iger. Bob Iger chose the wrong enemies. What did Bob do? Bob chose parents as enemies. Bob chose parents as enemies, and he chose the transgender community as his allies. What? Your number one customer isn't kids. Your number one customer is the person that has the power of the remote. That is the parent. You thought for a second the kid is putting on. You got to win the parents over. So what happens? Flop after flop.
Wow. That was just a very profound explanation of who the actual customer is. The actual customer is the parent, right? The parent controls the remote. The parent controls, what the kids watch, whether to buy the app, whether to subscribe for Disney Plus, whether to take kids to the movies, all these different things. The parents control the remote. And so obviously, you want equitable practices, and you want people to be treated with dignity, but you also got to know who your customer is, and you got to listen to your customer's voice, because there was a saying at one point in time that the customer is always right. And so you can see that when Bob Chapek was in control of the company, he was the CEO of the company, he actually lost a lot of money under him. So Neophyte said, I'm 45 minutes from Disneyland, Anaheim. LOL, you would think they would give things for free at this place. It's totally opposite of what's happening there. Over $100 to get in, passes sold out, etc. Park is even packed, even with trains. It just takes time for the bad talk to be forgotten. Yeah, and obviously, you're referring to Disneyland. I think Patrick Bet-David is referring to Disney World. Obviously under the same company, but in Orlando, that was when they were having this heated political fight with the governor, and they lost a lot of money under him and under Bob Chapek. And as we saw on the stock price, the stock price went from $200 to down to $85. That's a huge loss of capital. And so Patrick Bet-David, saying like they lost $195 billion. If I said, look at Walmart and food stamps and government assistance. Look at Budweiser this year. Yeah, I gotta go check them out. I gotta go check them out. I gotta see what Budweiser is doing. Because I think was it Bud Light that was getting into this whole political thing with was it Target or something like that? I remember Bud Light being thrown in the fire for something. So yeah, interesting. But yeah, we're gonna get back to the video.
After flop after flop after flop that Disney has. So for Elon, when he's taking a position like this, or even Dana, you saw the clips with Dana, with Peloton, or Dana
absolutely.
with a couple of the companies he talked about. You're seeing guys like Dana, guys like Elon, inspiring others. And some of this started off with a little bit of Trump, where he was not backing down from the media, inspiring others to say, I want to have a backbone. You just saw Connor right now saying, what are you doing to my country? Like, this is when you're starting to see, hey, I like the fact that you got pride in what you're doing. I like the fact that you got pride in certain values and principles that you got going on. And Elon's definitely got that. But to me, I think this is a very normal transition that you're going through. Were your parents married, or did they go through a divorce?
Oh, my mom remarried. My parents got divorced when I was 5. Like, my father had passed away when I was very young. Yeah. He took his life when I was 6, and then my mom remarried after that.
I had no idea.
No, it's fine. Yeah. That's the whole.
Sorry to hear that, bro.
Yeah, we talked about the pain thing earlier. That was like the driving factor for a lot of my.
I totally got you.
Yeah.
So when you think about your mom gets remarried, you're 5, right? Boys,
I think they may be transitioning topics, but as you can see, Patrick Bet David just really dives into, like, the main customer of Disney is the parents. I mean, the parents take uh, the kids to Disneyland, they take them to Disney World, all these things, and then when you're getting into these political fights, it really, this company can really suffer. And so you said this show is way right too. They hate Disneyland. Yeah, I mean, I don't think. I mean, I don't know if Patrick Bet David hates Disneyland. I'm just looking at the business analysis of him identifying who the true customer is. Because if you're going at it with the parents, if the parents are, like, hey, we don't want these types of shows, or we don't want these types of things, then you have to really reevaluate who is your customer. I mean, if your customer is the LGBTQ community, or, I mean, obviously they probably want everybody to be their customer, but it's just hard to please everybody. And you got to look at, like, where's most of your money coming from? Is most of your money coming from your parents? And obviously some parents believe certain things, and other parents don't agree with that. So, I mean, you have to, I think Disney went from being a little more, they were a little more neutral on a lot of things, and then they started taking a stand. And so when you start taking a stand, you begin to, have to stand on that hill. And so, yeah, Disney does have international customers, they do, but they still lost 195 billion. That's a lot of dollars. And Patrick Bet David is saying that they have to, they're looking at selling part of it, and they may have to sell part of it to Apple. And so, regardless of the philosophy behind they have international customers and stuff, it's if they have the capital, they lost a lot of money. So, yeah, that's what it boils down to. All right, so we're gonna transition to today's market. Obviously, today we saw a sell-off in many stocks. So we're gonna go ahead and jump over to just what happened today in the markets. I did a short live on this earlier, just to kind of give you all. You bet me $1 that the stock will go up. Hey, any stock can go up in this environment, so I'm not betting. I could put that $1 into Gala coin and get what, not 100 Gala. I could get at least 50 Gala, maybe something like that. so yeah, nah, I'm not betting. So let's see. Markets are irrational right now. All right, so we see that stocks cooled off. I mean, it's kind of interesting. I mean, when you look at the Dow, I mean, the Dow is at, I mean, it's just wild. Like, it's at an all-time high. The Dow, sold off significantly, back in a year ago, a little over a year ago, and now it's already hit an all-time high again. Now, I don't know why is the rest of the market not holding up, with the Dow. I mean, as far as, like, when you look at certain companies, right? Some certain companies like Disney, it's not, it's probably not in the Dow, but it's definitely not getting any love, really. The S&P and S&Ps, at an all-time high. And then you have the NASDAQ. I don't think the NASDAQ reached the all-time high just yet. I mean, the NASDAQ's all-time high was, let's see, let's break out the chart. Yeah, the NASDAQ's all-time high was 16,000. Right now it's at 15,000. I mean, it's been ripping for a while this year. And so, yeah, so we can see, like, many of these indices are at all-time highs. So this is kind of just interesting. They did sell off. Some of them sold off today, but it was mostly individual companies. We saw gold sell off a little bit. It's still hovering. Gold is still hovering at its all-time highs. I mean, it closed at 2071. I think that's a new all-time high. Let's see. No, 2071 was what it closed at. That's the all-time high before. Yeah, I think that's it. Yeah, so gold closed at a all-time high. We saw that it kept piercing this level, and it's finally starting to show some good signs. It keeps hitting that level, so that communicates something that gold definitely wants to go higher. Let's look at silver. Silver still way far off from the all-time highs. I mean, what's up, JT? Good to see you, brother. Good to see you. So silver's way off from its all-time highs. Obviously, I mean, we still got our silver bugs in here, right? But I mean, just silver is just like when it shot up in 2011, I mean, $48, right? And then now it's just you know, at what, 24 bucks. I mean, it's not getting the traction that you would think it would. Obviously, we can argue during this time that it was overvalued. It was heavily overvalued, and then went through a huge correction, and then, you know, obviously, you know, 2020 it hit $10. I mean, $12, and then it popped right back up. So I think silver will go higher in the long term, but it's definitely a downer when you look at this chart compared to the gold chart. But, you know, at the same time, central banks are buying gold. They're not buying silver. So you do have retail investors and some institutions buying silver, but you don't have that big, huge amount of capital from central banks going into silver. So how high in 2024? Let's see. You think you asking me for a price prediction? 2024 price prediction on silver. If I were to give a price prediction, I mean, I think silver is going to hammer on this. If I'm looking at the chart right now, this is the resistance. I mean, if you're looking at like a more longer term resistance, so let's see. Obviously, it keeps hammering on this level here, which is close to what, $27? No, it's a little higher than 20. Yeah, about $27, somewhere around there. $27 to $28. So I think it's going to touch that level again. However, I mean, it has to break through for me to really have like a ultra bullish targets where I could say like, oh, it's going to be over $30. But yeah, this will probably be my target for this year, somewhere around $28, 27, 28. So yeah, I don't know if that was what you were asking. I say $27, and then everything sells off. Everyone sells off. Yeah, that tends to be the trend, right? You know, silver pops up. But I mean, the question, I mean, it's kind of interesting because like you do look at silver and you see people sell off, you know, whenever it hits a certain price, but the premiums, like whenever silver just shoots up, the premiums just like cover a lot of the price action. So like a lot of times we're looking at, you know, hey, silver at $30 an ounce, like, but you can have American Silver Eagle selling at $38-40 an ounce, you know. So like the premiums really take over whenever silver does get to those levels. And so, I mean, which is probably why it sells off, you know, like people aren't selling for spot in that time, especially when silver's hot. JT said, I be in these YouTube streets, jumping from chat to chat. Man, I see you, man. I see you. All right. So we're going to look at just some other assets, and then I have to get back to the family. Obviously, crypto, Bitcoin hasn't moved a whole lot. I mean, it's been trading in this range for a little while. Like if I zoom in on this chart here, I mean, it's been trading in this range here. I mean, somebody could argue that's a bull flag. There goes up and then right. But you could break to the higher. I think it's just waiting right now. There is news that the BlackRock Bitcoin ETF is going to be approved in January. And I think that Bitcoin is really just gearing up for that ETF to be approved. And I mean, we could probably see, you know, let's see the previous resistance levels or support levels. We could probably see Bitcoin jump up to 46, maybe past 46. We'll have to see if like it closes above that or whatnot. If I'm just looking at this level here. And so this would be from, let's see, I'm trying to see what date this was. March of 2022 to be around that. So Bitcoin, I mean, obviously it could shoot past that. I mean, this is just a little target that I'm looking at that was previous resistance here where it couldn't break above this 46,500 range and couldn't break above that. And then it broke down last year, leading all the way up to this year. So I'm just expecting that we're probably going to come back to this resistance level. So, but I bet we're probably going to shoot past that. Now the question would be if we close above that 46 level and how long we remain in that trend. So if it pops up to, let's say 50,000, here, how long is it going to stay above 50,000? But obviously if it pops to 50,000, well, on the spot ETF approval, I mean, you're inching up closer to the all-time highs. And I think that a lot of the coins are going to run. You have the Bitcoin halving coming up in April. And so March, April. So I think that Bitcoin is just kind of winding up for another shoot higher, but I could be wrong. I'm not a chart expert, but that's just kind of what I'm looking at right now. He said premiums will definitely fall off when you sell during the spot periods. LCE, so coin be buying under spot. LOL. So yeah. So I think Bitcoin is probably going to shoot higher. These altcoins are going to shoot higher. And so currently, I mean, there's some stocks that's been selling off. For example, Riot platforms, they sold off today. They hit $15.25. Obviously, they've been spiking higher since the beginning of the year. I mean, they're low, early in the year was about $3. They spiked up to, hang on real quick, y'all. Voice is just tripping. Vocal cords need to get some more water or something. So anyways, the Bitcoin ETF, not the Bitcoin ETF, Riot, shot up to $19, a little over 20. It didn't close above that. Came down, and then now it shot back up. And so it sold off today. And same with other Bitcoin mining companies such as Mara, Marathon Digital. They sold off as well. They were just at $30. I have this stock in my kids' accounts. They hit over $30 yesterday. I thought about selling in their accounts, but I just know it's going to go higher later. I just know it's going to go higher, so I'm just keeping it. But you see, Mara had a tremendous move upward. I was buying my Mara at $3 back in December of last year, and so as you can see, like the sell-off last year, was significant. From December 5th, to the end of December, it just sold off and then it popped up. So this is called tax loss harvesting, where companies will take their losses on positions so that they can offset their taxes for the positions that they gained on. And so you can see that today with the sell-off. And so, yeah, that's what we're looking at. So I want to go ahead and jump over to my next screen here, which explains tax loss harvesting, gives a definition and an example. It's selling securities at a loss to offset the amount of capital gains tax owed on other investments. Tax loss harvesting is the timely selling of securities at a loss to offset the amount of capital gains tax from selling profitable assets. And so you're going to sell the assets that you've lost on. If you bought higher, okay, I'm going to sell this asset off because it's lower than where I sold it at than what I bought it at. And so those losses will help offset your taxes. So this is how many investors use the strategy and everything to pretty much save on their taxes. So we saw a sell-off today. Saw a sell-off in oil companies. All right. Oil, has been still hovering at 60, $70, but it's sold off today as well. And you had most of these companies selling off as well. So I do want to let you all know that Echo Patrol, this stock is just a beast, y'all. It's a beast. This stock does not run, but the amount of dividends it pays out is just very, very significant. So I just actually got my dividend payout from this company. And I didn't put as much money as I wanted to into it, but I got pretty much $3.30 per share that I had. So I got about 2 shares out of that from just holding the stock, right? 27.7% dividend, $3.30. So that was what, no, I didn't get $3.30 per share. That's like divided by 4, whatever. So I did get a significant amount, which I was not expecting, but yeah. So Echo Patrol sold off today, and it's just a beast in how much their dividends are. So just wanted to share that. But all right, y'all, I got to get back to the kids and everything, get back to the fam. Let's see. Neophyte said, DC8 down today, VRM, SLDP, BKSY, positions killing me. You could roll over your losses too, right? Cap is $3K per year. I'm not sure the nitty-gritty details of it. I would just give you a cookie cutter answer to consult with your tax advisor. Because I do not know. I may have to actually hire a tax someone to do my taxes this year. So it's just my taxes get a lot more complicated when you start adding in when you start adding in just a lot of these other assets, and then you get into crypto and everything, like these taxes just get a lot more complicated. So yeah. Let's see. Victor said uranium prices extended a surge to close 2023 at $91 per pound, nearly doubling since the start of the year, and to levels last seen before the Fukushima disaster in 2007. So in Fukushima was in 2011, Victor. But yes, uranium has surpassed its Fukushima levels way past. It's pretty much, I think it was at $70 per pound during Fukushima. And then now it's at 91. So let's see. Let me find the actual commodity itself. I haven't even, I checked some of my uranium stocks, but I need to check and see where my Sprott Physical Uranium Trust Fund is doing and everything. Let's see. All right. Yeah, this haven't even been updated. I'm gonna have to go to a different chart. Sorry, you all. I'm trying to find that uranium chart. I just looked on TradingView, but the one I saw on TradingView was very outdated. All right, here we go. Yep, this is the one I've been watching on Trading Economics. All right, so Victor, what are you saying before? Trying to figure out what you were referring to. So yeah, you can see uranium's at $91 a pound. And then if you zoom out the last 25 years, this was the previous high, $140 per pound. And then you had the sell off, and then you had Fukushima. I mean, it rose up in the Fukushima to $72 per pound. And then you had the disaster, sold off, went through a huge bear market for a long time. And then now it's at $91.47. Now, some of the disheartenment around uranium is that some of the equities aren't rising as much as people feel they should be rising, with uranium at $91 per pound. So that's kind of disheartening for some of the equities, but let's go ahead and look at some of them before I head out. All right, so here we are. We're going to look at Sprott Physical Uranium Trust. Let's see, when is this updated? April 2023. This hang on. Why is this like? I need an updated chart. Yeah. Some of these charts are just like Sprott Physical Uranium Trust. All right, so yeah, I don't think these aren't updated. Let me go somewhere else. That goes back to April, not YouTube. That goes back to April of this year. So if I were to look at, let's see, u.un. Sprott Physical Uranium Trust. It's still running higher. $21. I think what's confusing me is is when you buy this Sprott Physical Uranium Trust, you're buying in Canadian dollars, and so I keep thinking of it in Canadian dollars because when I look at the charts on my Interactive Brokers, it says that. Let me pull it up real quick. Where does it say SPUT is at? It says SPUT's at $28.26, 28 CAD and 26 cents, I guess. So that's what it says on my Interactive Brokers, and so I suspect that that's because that's in Canadian dollars versus US dollars. So yep, that's where SPUT is. Let's see if we can find Yellow Cake. Yellow Cake. This is in, I believe, the British pound. Right. So yep, it's still running strong. But then when you get into like some of the equities, UEC, it's still kind of been chopping sideways with the price action of the physical uranium. I mean, UEC hasn't, I mean, it's broken significantly higher. I was buying UEC down here, but it's broken higher since then. But it's not really tracking with the physical uranium price. And so we did see NextGen jump up higher. It's at $7. Let's see. So NextGen's still been higher. These some skinny candles. But yeah. So yeah, uranium's still running. Hopefully it goes higher. Hopefully these stocks catch up. Hoping that they catch up. So yep. And he said, I missed that boat buying uranium. 2016 was prime time to get into position. Well, 2021, 20 and 21 was a really good time. Those stocks were cheap. Every energy stock, just when the pandemic hit, every energy stock just got plummeted. I was buying this coal company, BTU, Peabody. They're $24. I was buying for the 5-year. I was buying BTU down here, $1 a share. If I open up my Robinhood, let's see. If I open up my Robinhood, I can see where I bought them at. I didn't hold them. I didn't know what I was holding on to, but I wish I would have held on to them. Sad story. Let's see, BTU. I remember holding them. All right, so look at my Robinhood history. I was buying them in 2021. Let's see. Yeah, I was buying them in 2021. And then I know I was buying them before then too. I don't know why it's not showing up here. Let me see if it shows up in my Roth. Or maybe my Charles Schwab. It's probably on there. Because I had actual shares of the company. Yeah, I'm not seeing it. Let's see. Yeah, it was in my Roth. March of 2021. Yep, I was buying BTU at $3.98. Yeah, $3.98. So March of 2021, I was buying BTU down here, around here. So yeah, I wish I would have just held, but shoulda, coulda, woulda, right? I'm on to the next trade now. Oh, somebody's calling me. My sister. I'm gonna have to text her and talk to her later. So yeah, yeah. You said $1? Yeah, it was at $1. It was at $1, man. I was down there. Energy sector now consolidating. Yeah, I'm buying energy. I bought more Echo Patrol because the dividends on there was just insane. If I said I feel like I got more of those stories than actually losing money from a stock drop. It was always I bought low and sold a little higher, but not a lot higher. LOL, both ways I lost money. Yeah, that's rough, and this is part of the investment journey. Really, that's how I look at it. I mean, because no investor comes in perfect. You have to take these lessons and apply, think, act, and prosper, right? You have to take these lessons, okay, now I got experience in this particular realm of investing. So for example, I mean, same thing with crypto. I just gave you multiple stocks. I mean, I was buying Mara at $3. I was buying BTU at $3. I was buying these companies, and my issue was that I was getting too bearish, which I explained that in my last live stream. I was getting way too bearish on some of these companies, and I was expecting them to go lower. And I wasn't bearish on energy. That was kind of a different, I didn't understand the significance of how bad the energy problem was. And so I didn't hold some of those stocks long enough to really see the gains. I didn't know where to sell them at, or anything like that. And so that was just my I guess noobness, and that's how I say it, noobness. But some of the crypto companies, I was too bearish. I was thinking it's going to go lower, it's going to go lower, it's going to go lower, and we didn't get lower. And so I took a little profit thinking that, it's going to sell back off anyway. So let me sell this as a swing trade and I'll buy back in lower. Then it didn't go back lower. And so, yeah, I sold 50 shares of Carvana at $24. That was a nice Forex return. It's now trading at 52. Yep. But you got a Forex return out of that. That's better than no return. But, obviously you gotta, understanding like the macro and everything like that is very helpful when you can kind of do some fundamentals and some, not really timing of things, but you can really understand like, okay, what's happening in a macro environment and what's the case for this going higher. I don't know when you sold Carvana, but it just kind of depends on where we were at in the macro environment at the time, and then also what the chart said. So right now, I'm going in on energy and crypto, and so that's where I'm at: energy and cryptocurrencies. Cryptocurrencies is more of a speculation, obviously, but at the end of the day, I think that the amount of gains I can get from that speculation, the risk just outweigh the rewards, or the rewards outweigh the risk significantly. So I'm looking forward to that run up. And now also what I'm doing so that I don't sell too early, because like that's what I hear you saying. Like you sold 50 shares of Carvana at $24.85, and now it's at $52. What I'm doing is so I don't sell early, even in this next crypto bull run, especially if Bitcoin rises to, 50K out after the BlackRock ETF approval and everything. Say Bitcoin pops up there. I know these altcoins are gonna run as well. I mean, they're gonna probably double. And some of them probably gonna triple, right? And so in that particular scenario, what I'm going to do is I'm going to have these particular levels where I'm going to be taking profits. So right now I'm accumulating. We expect the spot ETF approval to be sometime around January. I mean, I don't know if it's mid-January, late January, or what. But I'm accumulating right now. And so that way, whenever we do get these runs, let's say Gala, I'm buying Gala. Okay, let's say Gala pops up to, let's say 20 cents. Its all-time high was 84 cents. Let's say it pops up 20 cents. Right now, it's trading at 3 cents. So if it pops up to 20 cents, best believe I'm taking my initial investment and I'm taking some profits off the table. But yeah, I need to have enough coins or enough shares of whatever I'm buying so that I can, do the free ride for the rest of it. And so I'm taking some my initial investment and taking some profits from some of these cryptos. But you definitely have to have enough to really make it worthwhile. And so currently I'm buying up Gala. Right now I have, I think, only about 8,000 coins or so. But I'm hoping to accumulate about 50,000 or 100,000 at some point. I'm not going to go too hard and invest a whole lot of money in it. But if I accumulate 100,000 of them and it goes up past $1 or something, like, then I'm going to make some good money. So yeah, that's how I'm playing it. Victor said, take your initial investment and take the free ride. Yep. Sometimes you got to do it that way. Or you could take some profits. I mean, if you get some significant profits and you can like pay down some debt, or you can, save money elsewhere or whatever, like, definitely do that. And so that's the Vegas strategy. LOL. Yes, I'll be doing that the next one. Yep, definitely. All right, you all. So I got to get going. I'll see y'all again sometime this weekend. If I don't see you, Happy New Year's, and you all take care and have a blessed weekend. All right, peace.